when do I need to start taking required minimum distributions or RMDs?
Yeah, this is an interesting question. Lots of people have asked, it used to be 70 and a half, and so some people still think that's true. It did change to 72, right? So that's good to know. So technically, the way it works is that there's going to be a year where you turn 72, and you have up until April 1st of the following year, essentially the year you turn 73, to take out that distribution. There's a calculation. It's based on the value of the account that you're looking at in the prior year, right? So essentially, for me, if I'm 72, I would be looking at the end of the year when I was 71, right? And so that value, last trading day, there's a little formula you go in, you can figure out how much you have to withdraw. And I have until I'm April 1st of the year I'm actually 73. Go ahead.
But the one thing you have to be a caveat if you delay that is that you're going to have kind of that double RMD that you're required to take because you also in that following year have to take your RMD for 73.
Yeah, that's right. So once I turn 73, if I'm taking out my 72 distribution, because it's one time, you can delay it up till April only that one time, and so then when I'm actually 73, I still have to take out my 73-year-old debt distribution in that year, so I could end up with double amounts. The only time you'd ever want to do that is if you either forgot and messed up, and so you're scrambling to get it done, and you have a little bit of a leeway there till April 1st, or you actually have a big amount of income that's coming in your 72 years old year, and you want to delay more income until 73 just because it actually works out better tax-wise as far as that goes. So there's a little bit of flexibility there. I get a lot of questions that people think they have to do it by their birthday, and so that's something we can clear up here. You actually have to do it on the normal year. That first year you have until April 1st, but on a normal year you'll have until the last day of the year, right, to take that out. I will say, in our experience, these custodians are getting really hammered by these required minimum distribution situations at the end of the year. And boy, I wouldn't wait until the very end because some of them don't even have the labor to get it done. Maybe mid-November is a much better time to look at than December 31st.
Yep.
Just because you could end up at the scenario where they can't get the distribution done. There is some issues there as far as that goes.
And you don't want to pay that 50% penalty.
No, that's right. That's the penalty that really does drive this. And required minimum distributions are, you have to take them out. They're taxable. If you do a conversion of a Roth IRA, you have to take out the required minimum distribution first. You can gift through what's called the qualified charitable distribution, part or all of your required minimum distribution to charities. That would make it not end up on the tax return. So if you're already giving money to charities, and let's say I have to take out $10,000 and I'm already giving money to charities, I could give $5,000 to those charities, and then only $5,000 ends up on my tax return. Then you don't have to take them evenly out of every single account you have. As far as the IRAs goes, you can combine those together. 401ks have some special rules, though, correct? So
Yep.
basically, if you're still working at 72 or beyond, you don't have to take a required minimum distribution out of the 401k at that job. Other 401ks that you might have sitting out there don't have that special exemption, but for that situation, you can do that. We don't have a lot of those scenarios per se, but it's happened a few times.
Yeah, and there's also you can take RMDs if you have multiple IRAs. Let's say, for example, you could take an RMD for all those IRAs from only one of those. So, but that only works for individual retirement accounts and 403bs. If you become a 401k, you have each 401k you have to take an RMD for.
Yeah,
so
separately.
Yep.
Yeah, exactly. So, obviously maybe there's some, opportunity there to make sure that you've got all of your things where you want them, if you still want them in the 401k for some reason, if not, and it just happens to be sitting out there and you're just not really paying attention to it, maybe it's a good chance to kind of combine that in with your IRAs. There's pros and cons to that, but one of them is that you got a little bit more flexibility as far as how you handle your RMDs potentially, as far as that goes. But it is actually a really big area for tax planning within retirement, is understanding requirement of distributions. The more you have in these retirement plans, the more it can make an impact on what is going on for you tax-wise. And there's lots of different things you can do all the way through your life, to be honest, to try to reduce the impact of these requirement distributions. We've been ballyhooing this for so long because we really get to see, kind of the end result of this. And, so we're trying to get people to pay attention to this area because I think it's important.